All the three state-owned oil marketing companies, that is IOCL, BPCL and HPCL, have been buzzing in trade for the last few days. And this could be because the third quarter of financial year 2022 earnings of all the three oil marketing companies are expected to be good. Now, if you see in the third quarter, Brent Crude, which is the Asian benchmark for oil, averaged higher at $80 per barrel. Now, on the back of this, all the three oil refiners could report an inventory gain. Now, generally, there is a direct correlation between crude prices and inventory gains. That is, if crude prices average higher compared to last quarter, all the three oil marketing companies tend to report an inventory gains, and vice versa. Now, the correlation is because oil refiners maintain an inventory, and when price increases, they end up selling the earlier bought inventory at higher prices through their retail outlets. However, not necessarily the entire gains would be actual. Some of it could just be notional, that is just a book entry. On the refining side, if you see, the Singapore gross refining margin, which is the Asian benchmark, also averaged higher owing to improved product demand globally. In the third quarter, it averaged at around $6.1 per barrel, which is a jump of nearly 60% compared to last quarter. Now, if you see, higher gross refining margins means that the refiners will earn more for refining every barrel of crude. Now, moving on to the marketing business, in the first 2 months of the third quarter of financial year 2022, the sale of oil products were already higher by nearly 10% sequentially. Also in the third quarter, the gross marketing margin that the oil marketing company earns on selling every liter of petrol and diesel, that was higher at around 6 rupees and 6.5 rupees per liter, which means that the margins on petrol doubled while that on diesel were higher by nearly 40% sequentially. Now, this rise in margin was largely because of the cut in the excise duty done by the government in November. Now, oil marketing companies did not pass on the entire benefit of this cut in excise duty to consumers, which resulted into higher gross marketing margins for them. Now, only because of this cut in excise duty, the oil marketing companies had this leeway. Now, higher marketing margins will generally benefit HPCL the most because the sale of retail fuel contributes nearly 60% to the company's EBITDA. To sum it up, sequentially the reported earnings would be great for all the three oil marketing companies owing to a strong refining and marketing environment. Along with this, sequentially higher sales would also boost their earnings for the oil marketing companies in the third quarter of financial year 2022.